two meetings between Sergei Glaziev. Now, Sergei is, this finance minister who's been saying for 3 years, this is why I've been saying that the BRICS currency will be pegged to a basket of commodities and a basket of currencies. He's the architect of all this. The meeting was between Glaziev, Putin, and Dilma Rousseff. Dilma Rousseff, for your listeners who don't know, was the former president of Brazil and is now the president of the BRICS New Development Bank. This is no small job. She is the head of the BRICS New Development Bank, and she came out and confirmed that in the two meetings, they have agreed in principle to a new BRICS settlement currency called the unit. We're going to get into that in a moment. And that it would all be traded over Project Bridge. Now, I don't know if I've spoken with you about Bridge, but I have talked a lot about it over the last year and a half or so. It came out in 2023. It's actually been developed for years before that, but developed between China, Hong Kong, Thailand, and the United Arab Emirates. It is a cross-border payment system that allows these countries to trade their central bank digital currencies with one another, not going through any United States intermediary banks or the SWIFT system. And I believe that gold and oil have been remonetized, right? I've said that incessantly, including, look at oil. I always talk about gold, but look at oil in terms of its value. China was awarded a massive $2 or $3 billion contract to modernize Iran's biggest airport. And they're being paid for it in oil. Not dollars like it used to be, but in oil. So I find it ironic that the first two trades that they did in testing this system were between China and the UAE using digital yuan to buy oil and to buy gold. And they worked. And now it is working. And what's interesting about the Project Bridge is that Saudi Arabia just became a full participant in Project Bridge, which is not compatible with US dollars. Not compatible with US dollars. The largest oil producer in the world who just joined BRICS became a full participant in Bridge. Dilma Rousseff said that the new unit currency will be 40% gold, not a basket of commodities, but 40% gold and 60% a basket of local currencies. Now, as far as the basket of gold, what did the BIS reclassify gold as? BIS being the most powerful bank on the planet. Well, they reclassify gold, ironically, as the only other tier 1 reserve asset. And it's interesting, if we go back to 2017, you had all of these banks that I mentioned repatriating their gold. The Bundesbank, Austria, Hungary, Turkey, Poland, the Czech National Bank, the Dutch National Bank, on and on and on. Weird at the time. Those same banks in 18 bought more gold as a group than they did in the 60 years previously combined. And then the next year in 2019, that number was doubled. Go on a wicked buying spree and repatriation spree. And then somehow miraculously out of nowhere, the BIS says, oh, by the way, gold is now a tier 1 asset, the only other one, next to US dollars and treasuries, as if they weren't told this. Guess who is behind Project Bridge as well? Oh, yeah. That would be the Bank of International Settlements. They are a full participant and developer with, alongside China, Hong Kong, UAE, and Thailand in Project Bridge, which is not compatible with US dollars, which Saudi Arabia just joined in.
The global financial landscape is undergoing seismic shifts, and the central players in this transformation are the BRICS nations: Brazil, Russia, India, China, and South Africa. What we are witnessing is the formation of a new financial system, one that challenges the long-standing dominance of the US dollar in the Western economic structure. For decades, the US dollar has held the position of the world's reserve currency, largely due to its role in oil and commodity trading. However, with recent developments in the BRICS coalition, we are beginning to see the emergence of a multipolar financial world, one that is more reliant on tangible assets such as gold and commodities. Sergei Glaziev, a prominent Russian economist, has long been advocating for a currency that is pegged to a basket of commodities and local currencies. His ideas are now taking shape, with the BRICS coalition agreeing in principle to create a new settlement currency called the unit. This currency will be backed by 40% gold and 60% a basket of local currencies, including the currencies of the BRICS nations. What we are seeing is a deliberate move away from the US dollar, and this has profound implications for the global economy. One of the key developments in this new system is the creation of Project Bridge, a cross-border payment system that allows the BRICS countries to trade their central bank digital currencies CBDCs, without using U.S. intermediary banks or the SWIFT system. This project was developed by China, Hong Kong, Thailand, and the United Arab Emirates, and is designed to facilitate international trade outside of the dollar system. It is already operational, and the first transactions using bridge involved China and the UAE trading digital yuan for oil and gold. This is a clear sign that oil and gold are being remonetized and will play a central role in the new financial order. The inclusion of Saudi Arabia as a full participant in Project bridge is particularly significant. Saudi Arabia is the world's largest oil producer, and its decision to join this alternative payment system marks a major departure from the petrodollar system, which has been a cornerstone of the US dollar's dominance. By participating in bridge, Saudi Arabia is signaling its willingness to trade oil outside of the dollar, which could have a cascading effect on other oil-producing nations. This move away from the dollar is not just theoretical, it is happening right now. The decision to back the new BRICS currency with 40% gold is equally important. Gold has long been seen as a store of value, and its role in the new financial system is being solidified by the actions of central banks around the world. The Bank for International Settlements, BIS, often referred to as the Central Bank of Central Banks, reclassified gold as a Tier 1 asset in 2019. This places gold on par with US dollars and treasuries as a reserve asset. This reclassification was not an accident. It was part of a broader strategy to prepare for a shift away from the US dollar-dominated financial system. In the years leading up to this reclassification, we saw central banks engaging in a massive gold-buying spree. In 2018, central banks purchased more gold than they had in the previous 60 years combined. In 2019, they shattered that record by doubling their gold purchases. Countries like Russia, China, and India have been leading the charge, accumulating gold at an unprecedented rate. This is not just a precautionary measure. It is a clear indication that these countries are positioning themselves for a post-dollar world. The reclassification of gold and the aggressive accumulation of this precious metal by central banks are signs that the financial system is undergoing a fundamental transformation. The fact that the BIS is involved in the development of Project bridge and the new BRICS currency underscores the importance of gold in this new order. For investors, this presents both challenges and opportunities. Gold and silver, long considered safe haven assets, are likely to become even more critical in the years ahead as the global financial system continues to evolve.
My main focus for the last 3-4 years has been on this growing coalition of countries, the BRICS, that are gaining legitimacy, gaining credibility, gaining critical mass, gaining mass adoption. And in 2023, we saw the admittance, which just went full effect here yesterday, of Iran and Saudi Arabia and the United Arab Emirates and Ethiopia and Egypt. And, you know, this is a big deal as far as I'm concerned. This is a very, very big deal. I think the end of the U.S. hegemony is over the entire world is becoming obvious. I think that's kind of one of the main trends that I saw in 2023. And, you know, I think I would cap it off by saying maybe the biggest event that I saw in 2023 that really puts an exclamation point on the BRICS. And, you know, we can talk about the fact that there's another 16 countries that have already formally applied, another 20 plus countries that have expressed interest. You're talking 40 countries in all, and if not more, a massive growing coalition.
The history of this essentially starts with the Russians looking at how to construct a new trade settlement currency for BRICS. Originally, it was Sergei Glaziev who was appointed by Putin to look at this problem for the Eurasian Economic Union, which basically were the stans, if you like, ex-Soviet Union stans, if you like, between Russia and China. And, you know, Glaziev actually wrote a paper for a Moscow business magazine called Vodomosti. This was about nearly 2 years ago now, where he made a very, very strong case for putting the ruble back onto a gold standard. So we can see which way his thinking is was going. And last year, ahead of the BRICS summit in Johannesburg, there were very, very strong rumors put out via RT, the Russian television service, and also by the Russian embassy in Kenya, of all places, that they were going to put this new gold-backed currency on the agenda for the BRICS meeting in Johannesburg. Mm-hmm. It didn't actually make the cut, and it didn't make the cut, I think, because China didn't want it at that stage, because China could see it would destabilize everything in the West, that is. And furthermore, India didn't want it. So you're talking about the two most populous nations, if you like, in the BRICS system. So that was put to one side. It is, however, the indications are that it will go on the agenda for the BRICS meeting in Astana that's in October. And we have seen, there's a paper which is a sort of early proposal of how this might be constructed. And they're talking about this trade settlement currency consisting of 40% backing by gold and the rest of it currencies. And the paper actually was not all that well put together. There were big areas of confusion, in my view. There were lots of questions raised in the whole thing. Now, it may well have been tidied up somewhat and some of these issues addressed, but it looks like we are going to see another attempt to get this on the agenda by Russia. And bear in mind that Russia has the chairmanship of BRICS in 2024, this year, and is organizing something like 200 meetings to do with BRICS. These being meetings which are sort of progressing various elements of BRICS and so on and so forth. And there is no doubt that the membership of BRICS will be expanded even further.
As the BRICS nations continue to build a new financial order, the implications for gold and silver are profound. These precious metals are likely to see a significant increase in demand as the global financial system moves away from fiat currencies, particularly the US dollar. The move towards a gold-backed BRICS currency and the remonetization of oil and gold are clear indicators that the era of fiat dominance may be coming to an end. One of the most immediate effects of this shift will be the rise in the price of gold. Central banks are already buying gold in record amounts, and this trend is only expected to accelerate as the new BRICS currency gains traction. As demand for gold increases and its supply remains relatively fixed, the price of gold is likely to rise substantially. But the real value of gold is not just in its price appreciation, it is in its role as a hedge against currency devaluation and inflation. Gold has always been a form of insurance against the instability of fiat currencies. In times of economic turmoil, gold tends to hold its value while paper currencies lose purchasing power. This is why central banks are stockpiling gold. They understand that in the event of a currency collapse, gold will remain a store of value, while fiat money may become worthless. This is not just theoretical. We have seen this play out in various countries throughout history, most recently in Venezuela and Zimbabwe, where hyperinflation rendered the local currency virtually worthless. For individual investors, the lessons are clear. Holding physical gold and silver is not just a good idea. It is essential. These metals provide a level of security that no paper asset can offer. Unlike stocks or bonds, which are subject to the whims of the market and the policies of central banks, gold and silver are tangible assets that have intrinsic value. They do not rely on the promise of a government or a corporation to maintain their worth. But what about silver? While gold often gets the most attention, silver is equally important in the new financial order. Silver has a dual role as both a precious metal and an industrial metal. It is used in a wide range of industries, from electronics to renewable energy, and its demand is expected to increase as the world moves towards a more technologically advanced future. This makes silver an attractive investment, particularly as a hedge against both inflation and industrial demand. The development of the new BRICS currency and the remonetization of gold and oil are clear signs that the global financial system is changing. For investors, this means that the strategies that worked in the past may no longer be effective. In this new environment, holding physical gold and silver is not just a hedge against inflation, it is a way to protect your wealth in an increasingly uncertain world. One of the most compelling reasons to hold physical gold and silver is that they are outside the traditional financial system. When you own these metals, you are not dependent on any bank, government, or financial institution. You hold a tangible asset that has intrinsic value, something that cannot be said for most other investments. This is particularly important in a world where currencies can be devalued overnight or financial institutions can collapse with little warning. In the coming years, as the BRICS nations continue to challenge the dominance of the US dollar and the Western financial system, the value of gold and silver is likely to rise. But even if this were not the case, these metals would still be worth holding. They are a hedge against inflation, a store of value, and a form of insurance against financial instability. Historically, currencies backed by gold have provided a level of stability that is sorely lacking in today's fiat currency system. The fact that the BRICS nations are moving towards a gold-backed currency is a sign that they recognize the inherent weaknesses in the current financial system. They understand that a currency backed by gold is more stable and trustworthy than one backed by nothing more than the full faith and credit of a government. For individual investors, the takeaway is clear. The world is changing, and the strategies that worked in the past may not be effective in the future. Holding physical gold and silver is a way to protect your wealth in an uncertain world. These metals are not just commodities. They are a form of money that has stood the test of time. In conclusion, the developments within the BRICS coalition and the broader global financial system are creating an environment where traditional investments may no longer provide the security they once did. As central banks continue to accumulate gold, and as new currencies are developed that are backed by tangible assets, the value of gold and silver is likely to rise. But more importantly, these metals provide a level of security that is unmatched by any other asset class. For those who are serious about protecting their wealth in the years to come, holding physical gold and silver is not just advisable, it is essential.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.